Hello, everybody. Welcome back to another episode of the Spartan Journal podcast. Thank you guys so much for joining us today. We have a lot of cool things to talk about. But before we do, I'm going to jump into a quick 5-day market recap. To start off with, the S&P 500 is down 2.45%. The Dow Jones is down 0.33%. NASDAQ is down 1.59%. Russell 2000 down 1.79%. And then Bitcoin down a little bit over 17%, as well as those other cryptocurrencies taking a big hit this week. Let's jump into our first topic. So we're going to be talking about Jerome Powell being replaced with Kevin Warsh in May, how this might affect the Federal Reserves as well as the stock market.
Yeah, so it was recently announced that President Warsh is being appointed by the Trump administration and President Trump to be taking over as the next federal chair in May of this year. So that's going to be extremely exciting news. It's very shocking to me. It was very shocking to me, at least. And just saw his previous background, I think to note, he worked on Wall Street for a little while, so he was working in investment banking. He worked for Morgan Stanley before being appointed as a Fed governor in 2006 and working up till 2011. So about 5 years. Mm-hmm. He worked during the Great Financial Crisis, so obviously he has a lot of experience.
A lot of credibility.
Of course, yeah. It's going to be really exciting to see how he handles this next move, because we've seen that President Trump has his stance on inflation. He has a stance on interest rates. He's more of a dovish, person. So he's going to look towards lower interest rates. He's going to look towards more economic growth, which Kevin Warsh wasn't before. He was originally hawkish. So I don't know if you guys want to.
So we've seen a little bit of change in the market this week from this announcement as well.
Actually, the gold was down a few days ago. It was down around 500. Down to like 4,700 from the previous 5,400 it was at, and then silver was down about 30 around, 30. And I mean, this could have been because of the fact that potentially investors were seeing that he had that old way of combating inflation, which ultimately can tell us that he wants the stronger dollar, and that I mean that's connecting right on to like why these gold and silver prices would have actually gone down in the first place.
100%.
Exactly. Well, investors look at him as a hawkish, person, as a hawkish Fed chair. So with the expectation that he's going to keep inflation under control and interest rate, and to do that, he's going to keep interest rates at a pretty high level. I think that the expectation is that throughout his term, the interest rates will maintain, or they're going to be high. So by investors seeing that, they might see that, gold and silver might not be as great of opportunities to invest in, because gold and silver are usually safe haven assets that are held under low interest rates. So I think that with the higher interest rates, people are going to see that there's not much opportunity in gold and silver and look towards more higher ROI investments.
And it's been fun to see that run up from gold and silver. This might even be a little bit of a readjustment from that great run up. Some people grabbing profits, grabbing cash after just again that crazy run. So it might be partially accredited to that, might be partially accredited to Kevin Warsh.
And we'll really see how Kevin Warsh works with the president with the views. I mean, we've like we said, he's shifting more towards what the president sees with potentially lowering these interest rates, but we just got to see what he actually does.
Mm-hmm. Yeah, no, it's exciting to see his impact throughout the markets. Exciting to see his impact in the commodities, but now I'm curious, how will his impact transfer over to maybe more private industries or like defense industries?
Yeah, one thing I was looking into is how this might affect the defense industry. And the defense industry has seen some pretty good times, I would say, in the last couple months, year, with a lot of different things going on, but we won't get into that today. The tighter monetary policy, as well as a more disciplined market that Kevin Warsh might offer, or that people might see him as, it's going to lead to a more profitable defense industry. They have reliable federal funding.
Yeah,
I mean,
that's the key point right there.
The key point as well being the defense industry is like less sensitive to higher rates.
Mm-hmm.
So they have long-term deals. They have the deals put in place that it's just reliable.
Yeah.
The high rates aren't going to affect this industry, and it's a credible. There's not a lot of uncertainty in it, so it's a safe play.
Well, My belief actually, I think that's you got that correct. I think that in the defense contracts that we already have, there's not going to be much change. But I'm curious to see in the new defense contracts that are going to be signed, with the ones that might have like a higher interest rate associated with them. So with the higher interest rate, there might be a higher borrowing cost for these defense companies. So I'm just curious to see if this borrowing cost is actually going to affect the defense producer, like Lockheed Martin or these kind of companies. It's going to be interesting to see. There's going to be a decline in contracts, rising contracts. So it's definitely going to be an exciting development.
Definitely all things to keep an eye on in the near future here as Kevin Warsh takes over in May, and a lot of things to come. But diving into our microeconomic topic, we're going to be talking about Disney, their new CEO. So again, some leadership changes, and Disney's seen a little bit of a rough patch in the last couple of years. What is this new CEO, or how this might change their company?
Yeah, so like as we've seen, Bob Iger started in 2005, went until 2020 when Bob Chapek then took over. And then, we've seen with COVID, all the stuff happening, it went up and then it came straight down. So then Bob Iger ended up coming back, and now we're seeing, what's his name? Josh D'Amaro coming in. And he's more focused on, currently his position is with the cruise ships. He focuses on cruise ships as well as the theme parks. So, well, we're going to see how this adds in, as these topics are going to be very relevant, as they've been very high revenue boosters.
Yeah, sorry to interrupt you there, so it's going to be definitely interesting to see Josh D'Amaro. He's had experience with working with the parks and merchandise aspect of Disney. It's going to be interesting to see how he handles that part of the business. He also has plans to expand into video games, so he has a lot of different goals that he wants to hit.
He has, It's been working with Epic Games, Fortnite, Disney. Fortnite.
I think it was a few years ago when he put in his team put together a $1.5 billion investment into Epic Games as a partner system. So they got some connections there. It's just it's a new sector that they're gonna invest in that could potentially be big, and we're just going to see how this impacts their stock in the long term.
Yeah, and we've seen some unsuccessful investments from Disney in the last couple of years. Their stock has taken a 40% hit in the last 5 years. They lost a lot of money around COVID and the streaming service, trying to battle those other large names. They also took a hit in the cable industry because people moving to these streaming services, and they're an owner of ABC and ESPN, so they've taken a hit in that way. But they have struggled a little bit. You guys know a lot of those theme parks closed during COVID. Cruises closed during COVID.
Exactly.
It was a tough time for a lot of people in Disney as well.
You can't ride a water slide 6 feet apart. It just doesn't work. The water's gonna just get contaminated. But there's a lot of things that are on D'Amaro's plate. He's got the $60 billion expansion of the theme parks. They got to keep their...
For 10 years.
Yeah, they got the growing of their streaming platforms. He's got to keep building on that so they don't die in that sector, as well as kind of just re-energizing key brands that have been potentially dying, like Marvel. We haven't seen a lot recently from them, but there's a lot going on. We'll see how it really impacts.
Definitely strong objectives in place for D'Amaro. And with him being appointed in March of this year, so it's going to be around the time of the annual shareholders meeting that Disney has. It's going to be interesting to see how he lays out those objectives and how the press, or rather how the audience and the press is going to respond.
Yeah, and he will be working with Iger until his term or his contract ends in December.
The thing is, Iger is still going to be a part of the strategic arm of Disney. So he's definitely going to be under Iger for a while.
Like a little mentor for the first few months of his
that's good
CEO.
But it could be good, I guess.
We'll see.
But I'd say, as a consumer, I'm interested to see how this theme park and cruise line, how this will change from this new leadership team. I know the past leadership team caught a lot of criticism for a lot of rate hikes. So maybe D'Amaro. Maybe he'll make it more easy for the Spartan Journal podcast team to get down to Disney. We'll see. I guess that's
get a little interview.
Yeah,
For sure.
awesome. Well, thank you guys so much for joining us again. Keep a lookout for how Kevin Warsh's term or new term coming up is going to change the market, and how the Federal Reserve is working with possibly the president, and then Disney, and some of the new leadership changes there. So thanks again.
Thanks.
Thank you.